Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert. The Dividend Diplomats. What are we talking about today? Well, we promised it in the comment section last week. We are going to give our thoughts and give a breakdown of the big SCHD annual rebalancing. Guys, listen, we know we're not the first video to talk about this. We're probably not going to be the last. But since we keep talking about SCHD on this channel, we've done a few videos, we've done some comparisons. We got a lot of comments over the last few weeks of when are you going to talk about it? That moment is right now.
Smash that subscribe button. Give Bert a nice thumbs up. Do it. Damn it. Do it. Do it. Guys, SCHD rebalance. Doing a throwback to LeBron James here. 23 stocks in, 23 stocks out. A little back-to-back. MJ, LeBron. What's going on here?
Yeah, it's going to be funny. So what are we going to do? We're going to break down SCHD, just give the quick rundown of their criteria, the big additions, the big deletions, and then we're going to compare their old top 10 to their new top 10 and give our overall opinion of what happened.
Bert, it looks like the additions total 11% of the new portfolio weight. One creeped into the top 10 as well in the additions. Did you want to talk about additions first or the
Yeah.
deletion?
Let's talk about some of the newbies. I think it's fun to talk about the new one.
Kids on the block, baby.
Yeah. So how do they even pick these? So SCHG does this annual rebalancing where they're very formulaic, which is what separates them from VYM and a lot of the other mutual funds. People like it because there's a methodology and they stick to it. Although some people don't like them as much right now because of said methodology. I'll put the definition here from their site, but they look for companies that have 10 consecutive years of dividend payouts, a minimum float adjusted market cap of 500 million, and meet minimum liquidity criteria. They then select, and by evaluating the highest dividend yielding stocks based on 4 fundamental based characteristics: cash flow to net debt, return on equity, dividend yield, and 5-year dividend growth rate. Interestingly, they're weighted based on modified market cap, and no single stock at the time of the rebalance can be more than 4% individually, and no sector can be more than 25% in aggregate. Those are the rules at which SCHD plays by when they do their annual rebalancing.
One bite, everybody knows the rules, guys. Wow. So there it is, guys. So that's what made the cut, why you made the cut. It's putting together what SCHD calls is the A team. They had the tryouts, they ran the drills, they put them through the gauntlet, they tested out the free throws, March Madness style, guys. And there was a big one that is actually 4% of the portfolio.
Yeah, they threw some money down. We're just going to put up the chart here of their 23 editions, and we'll just comment on a few of them. The number one new addition was Bristol Myers Squibb, ticker symbol BMY. That is now about 4% of the portfolio. And this was by far the largest addition. Rounding out the 10 additions, I'll just rip them off. Hershey's at 1.2%. That was the only other one that was over 1%. So a lot of them are these micro positions that are getting added. They didn't make too many big splashes. That's it. Then Cincinnati Financial, Skyworks, CF Industries, Dick's, Sporting Goods, Tapestry Inc., East West Bancorp, APA Corp, HF Sinclair Corp. Those are the top 10. And those positions get small. From these top 10, Laney, I think just my take is it's funny how many names we do not recognize for additions on there, where there are a lot of small cap, moderate cap companies that are just not household names, but apparently are strong dividend payers.
The fun part too is when, we'll put the 23 stocks here on the screen is there's a lot of banks, a lot of community banks in the bottom part of the list. So that's always fun to see. And Bert, back in the day, was SCHD, did they have in their guidelines that they can go up to 5% before now is it at 4%? Or were they always at 4%?
I think they were always at 4%, but what happens throughout the year is when we start talking about the deletions is when the price appreciates and you're right on that 4% threshold, you're going to cross over it. So when they look at the rebalancing, they either trim the position or they ultimately choose to get rid of the position. This is a good segue into some of the deletions, isn't it, Lanny?
Zing, that could have been played very well right there, Bert. So yeah, 23 deletions. Again, they have to maintain 100, individual stock portfolio here. And, They got rid of a lot of big names that we all know.
Yeah, and that's what's so fascinating to me here is this is the one that people are screaming from the mountains of why on earth did they get rid of this one? Why on earth did they get rid of this one? Broadcom, ticker symbol AVGO. They deleted that nearly 5% position. That was by far the largest SCHD position. They also got rid of Merck, ticker symbol MRK, ADP, Blackstone, Illinois Toolwork, 3M. The two big conglomerate competitors head to head are gone. Allstate,
New
New.
dividend aristocrats there.
Yeah, so they got rid of some quality here, and they got rid of some big names. We'll put it up there. Well, another funny one was they got rid of their Paramount position. That was 0.16 of SCHD. So, what's your take on the deletions here, Lanny?
Well, I think they looked at probably some dividend growth, um, plausibility. Not to say Broadcom won't have dividend growth, but um, I think when you look at Merck and if you look at because healthcare and pharmaceuticals going through some things, even though they just added BMY. 3M probably have limited growth there, especially if they do the spin off of the health unit. Northern Trust in the asset management space. Not sure what dividend growth looks like. Tyson Foods also, was number 11 that they got rid of. So it seems like they might be trying to get back to some higher growth on the dividend
Yeah.
side.
And that's a good point because you see that, and we'll put up a chart here, their last 5 annual dividend growth rates. It went from 5 years ago, 20%, 17.6, 11%, 13.9, all the way down to 3.77% dividend growth last year. So to your point, Lanny, trim out the ones that aren't growing and bring in the ones to try and catapult some of that dividend growth upwards.
And it could be just to maintain that higher dividend yield. Guys, with Broadcom exploding, that yield is a lot smaller. So if you actually look at, what they added, BMY, higher dividend, Hershey's, now a higher dividend. Cincinnati Financial's always had a higher dividend. So they're adding like some higher dividends and, AVGO, Broadcom being below 1.7%,
Yeah.
maybe did make the cut there.
Yeah. So those are some of the additions and some of the deletions. Now let's look at the top 10 because these are new and old. They're gone. They're either in or they're out. But they're also making a bunch of moves in between too. So they might trim some positions, they might add to some positions, and that really messed with their top 10 holdings. Their old top 10, just to rip through them, Broadcom at 5%, AbbVie 4.75%, Merck 4.69%, Home Depot 4.49%, Texas Instruments 3.93%, Verizon, Chevron, Amgen, Coke, and Cisco were all in that like mid to high 3% range, rounding it out. 2 of those are gone. We already said the number 1 and the number 3 from that list were gone with Broadcom and Merck. Lanny, what does the top 10 now look like after the rebalancing?
Do they allocate a lot more to UPS and Pepsi here?
Yeah, they're number 1 and number 2 right now. So
somebody got on to the Lanny investing from 2023, and even I was trying to buy as much Pepsi as I could last week before they popped up to the 170s.
yeah. So UPS, Pepsi, Chevron, Texas Instruments, Cisco, Pfizer, BMY, that largest new position, Lockheed, AbbVie, and Home Depot. So what, to your point, Lanny, UPS, Pepsi, Pfizer, they weren't new positions. So they've just allocated a little bit more into those positions or they just became larger allocations as they trimmed other positions from there too. So there's a lot of noise and a lot of reshuffling in that top 10 from before March 18th to after March 18th.
Lockheed Martin cracking the top 10 though.
Yeah. So, I mean, while it wasn't as like you look at the additions, you're like, yeah, there's nothing really special here. You look at how the top 10 is positioned now, and those are some pretty nice top 10 dividend growth stocks.
Yeah. I mean, I think a lot that yield at or above 3% when you look at the list here.
Yeah. I'm looking at it. I own all of them, but Bristol Myers and Home Depot. Those are the only 2 that aren't in our combined portfolios.
SCHD is Bert. Bert is SCHD.
Yeah.
Einhorn is a man.
Yeah, that's right. So overall, if you had to look at this, if you want to know what was my perspective for it, I like it. They stuck to the formula. I have no reason to hate on this. Like, Sure, does it suck that Broadcom's gone and they missed out on that 5% pop? Okay, but to your point, Lanny, Pepsi, they just picked up a nice little pop there from Pepsi from this last week. Their top 10 is high quality dividend stocks. You don't see Verizon in it. You don't see some of the other laggards in dividend growth. And based on looking at this top 10, you see why they're pushing towards companies that have stronger dividend growth. And it makes me feel just a little bit more optimistic that we're going to return to higher dividend growth rate throughout the rest of the year than we were going into this.
Got those butterfly feelings.
Yeah. What are your
Here's a
thoughts?
big question. Well, I was going to ask you a question, Bert. Are you still buying your 4 shares of SCHD?
Yeah. Yeah. I have no reason not to. That's, as I said, I'm positive about this. I'm positive vibes right now because why not? It's way more fun to have positive vibes. Nothing that they did is really going to stop me from the 4 shares.
You can't, you got to kill me to stop me here, guys. Yeah, I like it. Again, you know, I've always thought SCHD is a great ETF. They did announce their Q1 dividend as well for 2024, and it is higher than last year's Q1 2023 dividend. So
There it is. Yeah, exactly. That's exactly right. So let's see, can that momentum keep going and keep carrying forward? Let us know what you think about the big SCHD rebalancing in that comment section down there below. Are you positive, negative? Are you buying, holding, selling? Are you running the gauntlet? Are you buying Jeppy instead? Let us know down there.
yeah, are you guys buying SCHD ETF? Are you guys avoiding the ETF of SCHD? You got to let us know what you think about the rebalancing, the big annual rebalancing. Let
Yeah.
us know how many stocks you own as well in the top 10.
Yeah, and I promise everybody, we're going to take a little bit of a breather here from talking about SCHD for a little bit, unless there's some other newsworthy thing, because we know we've pumped out a bunch of SCHD videos, some by accident, some intentional. So we'll take a little breather. Let us know if there are other funds you want us to look at instead.
Hit that subscribe button, guys. Give us a thumbs up. Bert, you're either with us or you're against us, Jack. That was Bert the Hurt Locker and Lanny from the DD. Over and out.